you have stocks, you have your bonds, you have commodities, you have all these different things. There's different ways that you can purchase these different types of investments, right? Of course, there's individual stocks, right, where it's just, again, I'm going to buy a share of company X here.
About Kellogg's.
Yeah, right. Insert name.
Generic brand. Yeah.
Yeah. Then there is something that I think a lot of us, especially if you have invested in the stock market before, are familiar with. It's mutual funds. So a mutual fund, as the name kind of, I guess, self-explanatory, it's that we are pooling our money together to mutually benefit from the profits. So it's, again, that whole idea of purchasing power. Right.
Yeah.
So I might only have, I don't know, $100 to invest in the stock market, let's say. Right. But if I was going to take that $100, I probably can't only buy a small handful of stocks. Maybe I'd be lucky because I'm buying some stocks that are pretty cheap, like in terms of not necessarily their valuation, but cheap in the sense of, like, for one stock, it's only $10, let's say. Right. Whereas there are other stocks that, like, to buy one share is $700, right? Or well above that.
I think Tesla was one of those ones where, like, it's gone up a lot in the last 10 years, right?
Yeah, or I mean, you can go real crazy in things like Berkshire Hathaway.
Okay.
I apologize if there's a lot of clicking because I'm typing here. What's this going for? Silence, the worst thing to do. Okay. So currently, if you want to buy their Class A shares, which is like their, like, main ones, even though the vast majority of us will never buy a Class A share of Berkshire Hathaway, and not to go down this rabbit hole, but this is Warren Buffett's, like, company, I guess company is the easy enough way to phrase it. But to buy one share in Berkshire Hathaway's Class A shares is $628,930. So if you wanted one share, you're paying over $500,000 just to be able to get a piece of that pie.
That's just for the single stock. So
Yeah. Now they do have a Class B shares, which are a lot cheaper, but again, we're still talking a good chunk of change. So yeah, nevertheless, as I go on that tangent, we have individual stocks that you can purchase. We have mutual funds that you can purchase. So it allows you to go to a bank often, or I guess certain investment management portfolios where they are going to take your money along with my money and a bunch of other people's money and buy some stocks in different investments.
Group it all together,
Yeah. So that's what a mutual fund is. The kind of bad rap, if you want to call it that, around mutual funds is there's obviously a fee that's associated with that because it's not you investing, it's someone investing for you, right? So let's say I'm the manager of that mutual fund. I'm the one deciding what stocks we're buying, when we're selling, all that kind of good stuff. So you as the investor are going to make the profits, but you're going to pay me a fee of whatever. Let's say it's 2%, right? Of the total value of the fund, right? And that's the other thing with a mutual fund is that you're getting, the manager of that fund is getting paid regardless of how the fund does, right?
Yeah.
So we could all be losing money, but the fund is worth X amount, and I still am going to take my 2%. So that's another way to purchase. And then the other thing that I wanted to kind of touch upon that's very similar to mutual funds, but a lot different in some capacities, is an ETF. So an exchange traded fund.
Yeah, that's
right.
Thank you. Yeah.
You don't really ever have to remember that those three words, but ETF, if you just know that, that's basically taking ETFs and / index funds are kind of like interchangeable somewhat.
Okay.
an ETF is more of like, I would say, a broader term for it, in the sense that an index, for instance, is specifically focused on a certain grouping of an industry, right? So you could have the like bank stocks within Canada. So you could have an index of that, but essentially it's like, okay, I have an ETF of all the bank stocks in Canada. So whatever, go down the list of all the banks that you can think of.
Big
This
five,
fund,
whatever.
when I buy one share of this fund, it allows me to invest a little bit into each one of those companies, or in each one of those banks in that scenario, right? And so you can have an ETF around just about anything, really. But obviously, some of the larger ones are going to be some of the index, like the S&P 500, which is the top 500 companies in the United States, or the TSX 60, which is the top 60 companies in Canada, or so on and so forth, right? But you can also have, certain industries. Maybe you have an ETF that's focused around green technologies. I don't know, right? And so you can have everything from like a tech oriented ETF. So you can have Facebook along with Nvidia along with Microsoft all in like one fund, even though they kind of dabble in different areas, right? Nevertheless, ETFs, the kind of interesting or nice thing about them is that they again, you're pooling a lot of money together, similar to those mutual funds, but because they aren't actively managed in the way that a mutual fund is, because they're just kind of tracking a market. So we talked about the S&P 500, the top 500 companies in the United States. If you have an ETF that is trying to track that, it doesn't require any thought process on when to buy and sell things. It is simply following what everyone else is doing, like to the S&P 500. So, I recently Nvidia has really jumped up, right? They're like the number, I don't know, like 2 or 3 company now, like on the S&P 500. So they've skyrocketed up there. Well, okay. So if I'm a manager of that ETF, I would have to make sure that we're buying more shares of Nvidia to balance out the portfolio to mimic what the S&P 500 looks like, right? Now, you might also not buy more shares. Maybe you're just going to sell more shares of something else so that the percentages all add up. Again, not really that important, but the bigger part about it is like you need to know that, yes, with an ETF, they have to adjust things to mimic the actual market, which obviously is going to affect the price of different things. And similar to those mutual funds, you're combining a lot of funds together under one manager to go purchase these different investments, right? The only other it's funny, I was going to say the only other option that you can do for purchasing stocks is options. So for again,
that was forgot about that. Thank you.
Right. It's not necessarily the most common thing, right? Most of us who invest don't invest in options. It's a little bit more complex. It requires a lot more capital up front. The way that options work is that you're basically, ironically, because Jordan, you were talking about how like investing is a bit of a gamble within the stock market. In the case of options, you're essentially putting a bet on a certain stock or on a certain index or whatever you're looking at. You're putting a bet that it's either going to go up in price or you're putting a bet that it's going to go down in price. Options have a little bit of variations with it. You have to have, like, each option contract is what they're called, requires 100 shares of whatever we're talking about here. So whether it's 100 shares of an ETF or 100 shares of an individual stock, it doesn't really matter. And then you're basically also deciding, so we have the kind of 2 scenarios of like it's going to go up or it's going to go down. But then we're also having the situation of you can be someone who is putting your actual shares up for an options contract, aka I own 100 shares of blank company, and I'm allowing them to be utilized for an options contract by someone else, right? Maybe they're going to, yeah, whatever. Again, I don't want to go heavy into like explaining options, but you have essentially, someone who's putting up those stocks versus someone who's going to borrow those stocks and say, okay, I believe that these stocks are going to go either up or down, and I'm going to like hold on to them and pay you a fee.
Yeah.
Right? And so there's a lot of ways to make money with options, both in the sense that if you are like putting your stocks up for options, for instance, you can make a fee for that.
Okay.
Like, so it's not that someone is automatically buying all of those shares from you. It's that they have the options to buy those shares.
Yeah, and then you set the fee. Yeah.
And then you get a fee regardless, right? Like automatically. So that's one way to make money. The other kind of more interesting thing about options is that, and I think I had kind of talked to you about this prior to even just doing this episode, is that with options, you can make an argument that it could potentially limit your upside. But I would argue it limits your upside slightly. The more important thing is also it can limit your downside, right? So if I'm assuming a stock is going to go up in price, right? I might buy an option to buy a stock at a certain price in the next, I don't know, year, let's say. And as long as that stock goes up above what my option contract says, right, I can make money off of that. The nice thing is that if it doesn't, let's say this stock either doesn't go up that high or goes down quite a bit, right? Like, I don't know, something happens to that company or in the market. I don't have to buy those stocks. Right? So sure, I paid a fee to potentially have the option to buy those stocks, but if I don't want to buy it, then I've minimized my losses. That sure, I lost that fee, but maybe I didn't lose the equivalent of 10% on 100 shares of blank stock, right? Like company. So yeah, a little bit confusing, right? Because again, I apologize to anyone who isn't as familiar with the stock market and stuff like that, because I'm not totally explaining everything on purpose. If you really wanted to go learn about all those things, I suggest do it. It's really great. It's good to know those things. But for the purposes of our episode, I hope people get an idea of just like, how you can buy stocks or investments, the types of different investments that exist, that general aspect of things, right?
Yeah.